Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, November 15th, 2023. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the daily time frame of the ES. The previous session was a rocket ship to the upside, big time breakout and move. We discussed the potential for a high range day here. We were looking for about 75, 80 points. We got over 100 points of range and a steady continuation throughout the session. A big time break through the 44.30 level, which opens up, as we mentioned before, that September 20th FOMC and the recent highs into 45.50. So we're still making our way up toward the top edge of the prior key range. Big time strength, no letdown. Only weakness was weakness within range, and it's been a steady stretch. And that could perhaps likely be a template moving forward as well. This big stretch here was met with just a little bit of range-bound action followed by a continuation, maybe a little bit more range-bound and continuation. Not much in the way of pullbacks right now as this market appears very, very bullish. You do not want to fade into the strength unless we see a significant rejection at an edge, and right now we're not at an edge and we're not showing rejection. Instead, quite a bit of strength. We have PPI data on deck here very shortly. We also have core retail sales and other things coming up here later today. Thursday, initial jobless claims, Philly Fed, and then Friday, building permits and other things as well. So we do have a bit of economic data points coming out throughout the rest of the week here that could influence the volatility of this market. Further strength until proven otherwise as this market continues to make a move toward that 4,600 edge up above. Taking a look here at the NQ. The NQ, very bullish as well, big time stretch, huge day I'd say at the previous session, big time continuation to 16K now. This is a 14.2, 14.1 reversal up to 16K now, and it's done it in about as fast as you can do it. If you look at the 13-day range, now 14-day range, and you quantify it against other ranges of similar movement, you have to go back to last year to find something of similar strength, and especially this is to the upside, whereas many of the high range 13, 14 day ranges from prior periods were mostly to the downside. So big time strength, huge move here, as this thing also looks like it's broken a long form flag to the upside, especially from the weekly time frame perspective. So any pullbacks could continue to see extension here out of this market. Now, one thing to keep an eye on is how does the market respond once it gets to the edge. The edge up here and the previous highs of the year. Do we come up here, fade back into the range? Or is this an opportunity to extend this range with buy the dips along the way? We'll see here how it responds to 16K up ahead. Taking a look now at crude oil futures. Crude oil has been on a downward path since these highs here in September. Big time weakness here off of those highs. It's been a 20-point move. This right here is 95 and this right here is 75. So that's a 20-point move very quickly here. We're still in a very clear downward trend right now. This downward trend has been in effect, and given the previous session here, we saw a pullback into the bearish Pima trigger zone and then fell back below the 8. Given the trend, bears looking to defend the midpoint here for a continuation downward. I'd say a surprise rally could occur though if a rejection occurs here below the previous session's lows. If this thing isn't able to push to new lows, we may actually see a push back through the mid and into the previous high for a test into 80 later on in the day. So watch this side of the range right now. If there's a rejection of prices at 77, 75 or 77.5, that could lead to a return back toward 80 by the end of the day. Taking a look here at gold futures. Gold right now up 0.4%. Nice little bounce here back into the 1980 level. Now this market right here holding the 1950 level, which is flat VWAP, 200-day moving average. It's right at the center of this larger range here. And again, at the moment, we're back contained within that 2020 range down to about 1900. Here's the middle of the range, and we're kind of contained in that zone. The fact that we're right here at the middle of a flat VWAP means we could chop back and forth in here. Maybe we make a move to an edge, but it's not the easiest spot here to do business. We are bullish here, especially after the last couple of days. So bulls looking to defend early strength, early weakness for a strength here to new highs. We've already seen a checkmark day develop. That could continue to persist here as a day type the rest of the day. Lastly, looking at the YM. YM up about 1/3 of 1% right now. This market also making a massive move back up, now testing the 35K level. 35,022 is the FOMC key level from September. Remember, when that developed there, it was a box above the previous 2-day highs, and then price took the FOMC offer that day. That triggered a heavy round of selling pressure over the next couple of weeks, pullback, and then new lows. We've now come all the way back to that level after this major lower low failure and this rejection here. Now that we've done that, do we back off and backfill here into the breakout point and refill into here, or does this extend higher into the next highest pivot? It's going to be interesting to see how this one proceeds, but the uptrend is in clear effect right now. Any pullback could be modest with an upward continuation until we go find the edge. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.